Hello and welcome. Today is the 4th day of July 2017. My name is Derek and I want to go over an interesting report or article from the Crypto Compare report, which states that Goldman Sachs has pinned a $4,000 price tag for Bitcoin. First thing, I find it interesting that Goldman Sachs has even went ahead and even talked much about it. But a $4,000 price tag, or a 33% gain, a little greater than that, from previous resistance. Okay. So let's read this a little bit. Goldman Sachs analyst Sheba Jafari, head of technical strategy, has given a price target of 4K for Bitcoin, although they still believe it is in a corrective phase with a drop of 25% on the cards. See, if I were to write this myself, I'm giving price targets of 5 digits into next year and for the currency to explode on a global level. And because of such, that's a big reason why people are getting into now and why it will keep accelerating. Yes, the market is in a corrective phase and it has the potential to have these short-term fluctuations. And 25%, well, quite frankly, 1250 is one of the last places it was at. It could go up to 50% as a possibility for me. But that's my analysis. This is, of course, somebody else's. And as it rates here, that from current levels, this has a minimum target that goes out to 3,212 if equal to length of wave 1, Jafari wrote. There's potential to extend as far as 3,915 if 1.618 times the length of wave 1. It just might take some time, though, to get there. And when I see the 1.618, and this chart is very difficult to read, but it's a Fibonacci work. They're using the 61.8, 23.6, 38.2. There's a 261.8 in here. And when we look at these numbers, we have 0, 500, 1,000, 1,500, 2,000. And you notice the equal moving of each one. There's the exact same amount of distance on each 500 gap. So the movement from 500 to 1,000 is a 100% move. The movement from here to here is 50%. 33% from 1,500 to 200. 25% from here to here. And then a 500-point move becomes only that of 20%. And then it's 500, it's 18%. From 3,000 to 35. So each 500 move is less. So that's why I believe a logarithmic chart is more accurate. And it works to what, 50% or 100% from point A to point B. So you'd have, like, say, 500, 1,000, 2,000, 4,000, 8,000, 16 on a scale when you use that. And this way you can see more clearly all the older school stuff. Because when you look at this chart, it looks like, oh my goodness, this thing is just breaking out. And I find it easier if you're trying to, and I like to draw these lines like this myself, to use a logarithmic chart, because then you can get the better understanding for what it would be like. Now let's go ahead and take a look at this on bitcoincharts.com and show you the difference between a linear and a logarithmic chart. We're looking at short-term stuff. And when day traders, I guess, stick with linear charts, if they're only looking at charts of this nature, it doesn't make much of a difference. This is a log scale. Let me unclick this. And it really doesn't change much. So let's change the time frame out a bit. Instead of 5 days, let's do, say, a month. I don't want to look at quite as many candles. There we go. So this is the normal. Let's go to log scale. It shrinks a bit, but not really much of a change. Let's take a look at this now on a 6-month point of view. And in here, we have a log scale. Take this off. A little bit of a change. You can see the smaller size moves in here, and then things get big here. Yet, it's not the case with a log scale. Let's move this on to even a longer term period. And here's a situation with the linear chart. Let's even do more than 2. Let's do 4 years, so that we got all the big data. So here's a similar kind of chart, and when we move this into a log scale, this is going to look a lot different. We see a whole bunch of nothing here, a small okay move here, a decent move here, but oh my goodness, major movements, volatility it's never seen before. Let's put the log scale in. Oh, okay. So now we got these, the sizes are so much different. Now, of course, this little cattail does really get in the way. Let's see if this can be fixed with a different exchange, maybe BTCE. Well, this works out a little bit different anyway. I know there's not much time where it didn't trade, or was, I don't know. But this is a log scale chart showing the down move, the sideways, and a little bit of up. We take this off, a totally different chart. And because markets do move in a logarithmic fashion, and it makes it easier when you're calculating point A to point B in this type of scale, how much X move. If it goes from high to low, maybe the difference is a 2X, then that works on the logarithmic fashion. So I wanted to bring this up because I'm going to expect there to be a lot of people that are going to be misreading the market because they don't understand what a log scale is, I guess. But I find it a very much more effective tool. When I started trading back in 2008, it didn't take me long before I realized that this was the better way to use it, not the linear style. And it didn't take me long to realize that most people didn't understand how to use the log scale. Yet, thankfully, it's been available practically on almost every place I look at charts. Most of it, 9 times or 8 times out of 10. Where there's a place that has charts, fortunately, I can put the log scale in. So thank you for tuning in, and have yourself a great day. Bye-bye.